I'm John Hanna for CityTV.net in New York, and we have Greg Womack, the president of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, sir. Good afternoon, sir.
Well, good afternoon, John. How was your weekend? I bet it was busy up there in New York City with the 9/11
Yes.
anniversary.
We got to remember that we have to be vigilant about our freedom. Then again, we cannot be too vigilant that we cannot enjoy our freedom as well.
Well, I agree with that.
No, I went to over the weekend was the Lion King 3D screening. That was on Saturday, and to my surprise, I didn't realize there's going to be some celebrities there. Brooke Shields and Kelly Ripa. Well, they're two rows in front of me when we were doing the screening of the movie.
Well, super.
But the thing is, I wasn't VIP enough to be sitting right next to them. So.
You got to work on that one.
So what about you? How was your weekend?
It was pretty non-eventful. I really just kind of sat around, rested, and watched a lot of the 9/11 anniversary, stuff, and got up a little bit of work and worked out, and just had a very good weekend. Really, just really a lot of time to reflect. I think a lot of America did as well.
Hopefully we're never going to see that kind of devastation and destruction in our lifetime.
I agree.
So, Greg, what do you have for us at the Market Week report?
Well, the markets year to date, the Dow's off about 5% as of Friday, and the S&P's off about 8%, and NASDAQ right around 7%. Small cap stocks have really, taken it much harder, down around 14%. And see, it's back to Europe for the most part, and then also here, back at home. It's still jobs in the economy. But let's talk a little bit about over the pond. Your equities really suffered worldwide from concerns about the European Union's willingness to assist, their members of the financial problems, and that their patience might be wearing thin. Since the previous week's electoral losses for Germany's ruling party in 6 of the country's 16 states, this could affect future assistance, to other eurozone countries. So the euro has lost about 4% versus the dollar just in the last couple of weeks. So the turmoil also has helped 10-year treasuries yield to a new low below 2%. And this is below 2% for the first time in decades as investors sought refuge from all the European crisis. So like I said, we're seeing about, as we speak, the Dow is vacillating down, around 100 points, give or take 20 or 30, it seems like, around noon Eastern time on September the 12th. And the S&P is off around 10. And like I said, the big issue is, I believe, the European headlines. It's showing signs of wear and tear as the German member of the European Central Bank's executive board resigned. This is raising questions about the conflicts over the renewed European bond buying, the central bank's bond buying, the potential impact on the banks. And then you have a widely watched German court ruling that said the country's participation in the existing Eurozone bailouts was legal, but that parliamentary approval would be needed for future efforts. Then you have Switzerland, who their central bank said it would not allow the Swiss franc, which has been strengthened in the recent months by investors seeking refuge from these troubled markets. The central bank in Switzerland allowed to trade below 120 against the euro. This move is designed to help the Swiss economy remain competitive. Meanwhile, the Italian Senate approved an austerity package designed to reduce the country's deficit. So a lot of uncertainty right now swirling around the Eurozone area. And so that's strengthening the dollar some here and driving interest rates down. And of course our markets are down as well. Federal Reserve Chairman Bernanke didn't leave us really with soundness of what he's going to be doing as far as other tools that might be the Fed might use to assist the economy. And of course, calling persistent unemployment a national crisis, President Obama went to Congress to propose expanded Social Security payroll tax cuts. There's also some tax breaks for companies hiring new workers and new public construction projects. President Obama said the jobs plan, estimated to cost around $447 billion, would be paid for by deficit reduction measures to be outlined next week. Well, once he announced this, the markets didn't take kindly to it. We're down over 300 points at one point Friday. As far as our economy, we have the Institute of Supply and Management Index reported, and the U.S. service sector was up slightly in August, rising to 53.3%, and it was a 21st straight month of growth. And a little bit of good news as far as our trade deficit. It narrowed by more than expected in July, falling to $44.8 billion. Higher exports of industrial materials, capital goods, and auto-related products helped fuel this 13% decline. As we look ahead to this week, John, Europe is likely to continue to attract attention in the wake of last Friday's deadline for bondholders to agree or not to accept losses required by Greece's most recent financial aid package. Investors will also be gauging the potential impact on banks as Greece continues to struggle to avoid default. Here back home, new manufacturing, retail sales, and inflation data could shed light on the U.S. economy. So important releases this week will be wholesale inflation and retail sales on the 14th, consumer inflation and industrial production, also the Philadelphia Fed Empire State Manufacturing Surveys, and weekly new jobless claims on the 15th. So we've got a fairly decent week of economic news and updates, and then we have options expiration on the 16th, which tends to increase volatility. And so as we talk about volatility, we've seen the VIX index really increase in the last few weeks. The S&P 500, what I look at, John, is will we hold this double bottom that we started back, and the low was back on August the 9th. The S&P reached a low of 1101.54. So I look at that as our double bottom. If we can hold at 1100 roughly, we have a chance of not going down another leg. If we break that 1100 support, chances are we have some more pain left in the market. Dow Jones Industrial Average support level I have pegged at 10,600 as far as support. So it's important for investors to be diversified, but also be aware of the trends and the supports in the markets because of all the uncertainty. And if we look at protecting gains or principal if we break those levels.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CityTV.net in New York.